The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. And we obviously had a little pullback yesterday. I want to talk about that. I was trying to get this thing ready. It's ready to rock now. Got everything where we want it. And thanks for bearing with us through the trials and tribulations of getting this custom beta ready to go. So this is something I'm going to show you today, how this thing kind of works. I'm adjusting the custom beta look back here. This column's working. We got our charting right. Get this installation package out today, finally. Whew, been a long road. But finally got some volatility, finally. And you know what, I was watching all the news shows this past weekend. It's like, and then everybody comes to work in the Congress and watching and kind of feeling that this thing is going to, be stuck in the mud for a while. And all these Democrats and Republicans are going to put their stake in the ground and, get called out in later election years on what they voted on or didn't vote on now. Certain ways, you start getting the feeling that things were going to mire up in Washington as usual. And, if Trump continues to lean on the Twitter button, he's just causing undue, I don't know what you'd call it, but you know what I'm getting at here, just waste of time type stuff. It's just not necessary. We got a whole government that needs to make some changes, and the more they focus on trivial matters, in my opinion, the less things are going to happen in a good way. So the market's kind of, I think, started feeling a little weird about that. Could call this a healthy pullback in an uptrend. And we had talked about the market looking a little heavy lately. The risk was to be long. Some of these indicators, I look at the breadth indicators here, and now they're basically, and by the way, we're splitting out a 30-minute breadth too on its own product. But, it started looking a little heavy, got some signals that some things were changing over. And as we look at this, let me go back to this. As we look at this, some things have really shifted over here. And during the day, if you look yesterday, we were pretty much short-term breadth negative, and the market was kind of hanging in there, even on some couple of rallies that was looking a little heavy. But, as we look at the S&Ps and we broke down on the daily, we talked about, where's the target down here? 2341, I believe, is that unfair low? 2341.30, 25, let's call it. And we hit that yesterday and kind of bounced up a little bit. As soon as we hit it, there was that 2341 neighborhood there, bounced about 10 or 12 points, but then revisited pretty quickly and broke down. And when you see that happening, you think we could go lower. Right now, we're just hovering around those weekly unfair lows right there. This is our weekly. So that's kind of the big number for me, above or below 2341 right now. But right now, I don't think it's time to buy the dip. We have kind of a mixed bag here, and we're going to have to see how the market opens. Yep, and I'm going to get to some crops in just a bit here. Somebody's asking me in the den, but let me get a couple of things out the door here. So there were some stocks that just kind of hung in there. I'm going to pull up our opportunity matrix here. Some of these stocks, if I just go to flat out breakouts, you'll see, actually I could do this. Let me just do this. Let me get rid of the shorts and let me get rid of those. Okay. So you're also able to kind of dial in, what has the stock done relative to beta recently. So you're looking at beta correlation, you're looking at risk reward of the breakouts. And I'll just look at quickly drill down into BFB. So here's how this thing works. So it basically is going to give you an entry top of the profile here on this one, 46.97. Stock obviously moved up yesterday, but the target right now on this one is the unfair high 41.29. It's known that's your next leg up on this since it's a breakout opportunity, and the targets are either gauged on 13-week look back average true range for breakouts or breakdowns, or some inflection points that could possibly be in the way as near-term resistance, in this case on the breakouts, or other side of the box in the same time frame. So remember, these setups are based on weeklies and dailies combined. You've got a couple other here, DTE. There's another stock that kind of moved up yesterday. This is a daily. You've got Nextera. And again, these are kind of looking at your risk rewards combined in here. If you want to kind of focus on anomalies, and I'm not looking at the den as often as I should this morning, sorry about that. You can look at some custom beta anomalies going on here. So this is one I was kind of looking at that I thought might be pretty attractive. So it was on our breakout situation, and again, it didn't act, crazy good yesterday, but you got a profile appearing below price action here, and that's why it's on breakout. Okay, so that's always a good long signal in my opinion, especially on the long term. Here's AEE. This is another one showing it. I'm pretty happy with the way this product ended up, and I think you can kind of get down to business a little bit quicker than without having this in here. So let me kind of get everything back in order here. Okay, so just basically putting all the custom opportunities in your favor there. You can obviously go into the dashboard and do some custom sorting. All the inflection points. You got the tie to the marketplace on quite a few indices. Here's Apple. Let's just take a look at Apple. All right, so we pulled back to a still nosebleedish 139 here on Apple. A really cool kind of key reversal happening here. So but we don't have any new hint. We don't have any hints of new profiles even appearing even after yesterday on the daily. So it's kind of trade it from the short side at your own risk. Don't see anything really happening yet. I mean, this is, you got way better shorts out there than this particular stock. So somebody sent me an email about Apple. That's my thought on Apple. It's still kind of a no trade to me. We've looked at a couple of stocks in the scanner really quick, but let's kind of cover some of the usual suspects. The VIX, I wouldn't call this a massive move in the VIX. We're going to talk about this a little bit when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to take a look at the VIX. I'm losing my mind. All right. Here's the weekly of the VIX. A percentage change, yesterday, but 1463 is the big number up top. It's not a ton of fear in that pullback yesterday. Here's the daily. 12. What is that? 12. Let me get to where I can see this. 1263, top of the profile there. Kind of getting above and testing a little bit this morning, but again, I'm not trading the VIX right now. Let's take a look at the NQ. All right, so if this holds true by the end of the week, this yellow right here, and this is also in the scanner, if you go into our indices, where's there it is. All right. So see that yellow happening right there? That means a new supply area. Probably going to happen. A new profile in the long term would appear if this thing continues to stay yellow. So what do we have on the NASDAQ right now? We've kind of broken in one day, traveled beyond, above and below the current daily profile, which is wild, closed below it. And the big number on the NASDAQ is 53.55. All right, so we may get some kind of relief pops this morning, but that would be, in my opinion, a selling point. If we get a daily close above 53.55, you've got to look at the breadth situation, look at the internals of the S&P and the NASDAQ, and then figure out if that's worth looking at in a reversal type way back into the profile itself. But again, big number 53.55. Let's take a look at some grains really quick. Make sure I get the right ones. Yeah, let's change this to November, and let me save that. Okay. All right, so here's November beans. I'm still a little bit more short-minded on this. Just kind of hovering around $10. I think possibly an options play on this may be in order. I'm not seeing a lot of edge right now in trading this. We're not exactly near those long-term inflection points, which have been great trades. But if you forced me to trade this with options right now, I'd be looking more towards the downside. Let's take a look at Kansas City wheat. This is a trade that we June Kansas City wheat. Man, broke my heart. So this one, this is our weekly. Let me make sure. Yeah, this is our daily. Man, 470. All right, so Kansas City wheat. This was a really decent buy point. Kind of market came to you, hit a little resistance up there, came to you, a little bit of a bounce last week, but coming back and reversing, man, just not good. So right now, would really like to see this close back above 450, 451. Don't know if that's going to happen. Getting a little below where we started before on that kind of pull back into that 450 area from before, which really was, what, 50 cents a bushel rally in Kansas City wheat. That new profile attempt to appear, there's that. And then we obviously had this action, but right now this is not good for this particular product. I really had a little bit more hope that this would, bounce off of this 450 area and stay up. Bounced about 20 cents, but right now having that reversal back down below is obviously not what I wanted to see. So this is kind of a no trade right now. All right, let's take a look at something else I want to look at here. Let's take a look at the dollar. Just to kind of circle the wagons on things you probably should be aware of going on before you trade today. Here's a look at the weekly on the dollar. We talked about this ultimately revisiting this 99.67 area. So that's happened now. We're sitting literally right at 99.66.67. Here's the daily. So we talked about trading breakdowns below 180 last week, and just trying to have this come back to the weekly unfair highs. I actually like now how this thing is not really wanting to get away from this area. I feel like a weekly close back in the fair auction, 99.66.67 could be used as a place to sell with stops above. This is now kind of met its target, so it's time to just sit tight and see what happens with a weekly close, in my opinion, on the dollar. All right. Okay. All right, let's take a look at gold. As you'd expect, I mean, we talked about not shorting against this 1235, 1236 area and trading breakouts above. So now that's happened. Trading about 1245, 1246 right now. Here's the dailies. We talked about using 1217 to trade back up into 1235, 1236, and then kind of waiting for that breakout. So that happened yesterday. Market uncertainty. Gold felt spring loaded to me to kind of like do that number. So now you got big support at 1235 again, 1236. I would look at just keeping some longs on right now, but using that as a buy point on any pullbacks on gold. Ten-year and the 30-year just kind of reversed back, had a weekly close last week, back up in the profile, 123.09.10. Not huge reactions on the 10-year or the 30-year, but kind of doing the inverse type movement against the market yesterday. I don't know if there's a lot of hope for this to continue north, but that's the situation on the 10-year. Let's take a look at copper. So you got just incredibly large support here, 2.577. That's on the weekly, and this is the daily. There's 2.577. I think you can orient stops below here, even though we didn't really follow through there again, and use that as support 2.65. We've got something we can look at again, 2.577. I'm kind of blocking out the short side on copper right now. Shanghai still hasn't reached its target up top, 35.21, still looking for that. And crude. All right, so here's the weekly on crude. We'll talk about this when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you could potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Going back to the scanner here really quick. You guys throw out in the den obviously what you want me to look at, but I had blocked out the short side on some on the opportunity matrix here. Let me just block it out. And some decent little places to hide here. Here's ABBV. There's the daily view, that unfair high 65.02, and I was kind of looking at this just across the board here in alphabetical order, not really risk reward scenario, but here's the weekly. So just kind of sitting hovering around these weekly unfair highs, daily unfair highs. Again, I like how this daily profile appeared below price action. Let me just keep going down the list here on the longs. AEE breakout yesterday of all days. There's the weekly. There's the daily. Let's take a look at AFL. So this is uptrend support. So we're obviously coming, kind of pulled back. This is the daily. Here's the weekly. Decent support here. Again, just showing you relative to profiles AFL. And you can go down the list and just kind of look at long opportunities after a pullback like yesterday. What kind of hung in there might be kind of easy pickings, or at least a place to hide. You guys see how that works? Here's a risk reward scenario. Let's take a look at HCN. Okay. Yeah, I mean, not bad action. Kind of defended that daily unfair high. This is a decent risk reward. ROP. Here's the daily. Here's the weekly. As you can see, right in the middle of a new profile. I might be passing on this one, but again, you got a chance to pick a battle there at around 207.77. All right. We're going to hit Tesla. All right, so didn't escape the carnage. All right, so here's where we're at as of yesterday's close, around 250, 251, trading about that right now. Here's the weekly. Don't see any edge right now except possibly using the POC on the weekly to try to play around with this 249 and some change. Remember, a pretty wide profile POCs come into play. So you might have a chance to be picking some longs right there on that pullback. Let's take a look at Trump's favorite company here, Twitter. Man, I knew this was going to happen. God. All right, so just languishing, hovering, consolidating around these daily unfair lows, and then you get the pullback, and then you've got a weak stock and a market that finally pulls back and shows itself. This is the cool scene of trying to let the scanner pick out the dogs ahead of time. So, you know, if I go into the scanner and I look at, you know, stocks that were just there before, I mean, we've had some weak stocks, and a lot of those weak stocks just, and again, you know, we're just looking at Target here, just for example. There's the daily, and a stock that just, again, it showed itself early. I know it already gapped down and just washed some people out, but this is why you don't pick up stuff on sale. You wait for some technical reasons to, you know, to change the attitude on a stock. And again, just, you know, weak stocks went down yesterday. Let's take a look at Under Armour. I want to take a look at this one here. Yeah, I mean, just slow death. Don't see any changes here. God, man. Ooh, that's ugly. I mean, if you're in something like that and you're, you know, doubling down on it, dollar cost averaging is that nice way they say it on CNBC, or I think Kramer might love that term because he's such a smart guy. I'm being sarcastic. I hope you guys know that. This is sometimes it feels good just to get out of something. I mean, even for a day, just clear your head. Again, if you're in this, you can always get back in it. But again, I mean, I've made these mistakes. I'm just trying to help you avoid them. Learn from Logan's unfortunate mishaps. Here we go. Let's take a look at Alcoa. All right, so again, you know, this is a stock, like the market obviously recently had just kind of been moving up. This is Alcoa, new profile, hovering around those lows, and now we're kind of getting a breakdown here on the weekly. So what do you do with it now? I think you got pretty serious resistance now around 34, and you're going to have to wait. If you've been long, it's okay to get stopped out, but that kind of compressing down into those weekly unfair lows kind of allowed this stock to show itself early and then caught that really decent downdraft action yesterday. Here's the daily right there. It's okay to wait till we get back above 34 if you want to be long this. Coca-Cola. Safety, I guess. God, I don't know how else to say this. This disturbed me. Anyway, getting back above 42.40. If the market heads lower, this is sometimes one of those safety plays. I want to pull up Procter & Gamble. That's usually in that same camp. It's kind of like the anti-stock. Procter & Gamble on the weekly. This is kind of interesting right here. 91.89 is a big number here. If you think the market's going to head lower, you don't want to be shorting this stock, period. This has been like an all-out, flat-out long, can't do anything wrong. When Procter & Gamble's going up, when the market's going up, if the market pulls back, this thing can go higher. Johnson & Johnson. All right, so we had the first signs the other day of 2 days ago, actually, of new profile will appear, had that yellow peel back, profit taking mechanism on longs. That's your signal that we don't talk about picking targets a lot with these profiles, but when that happens, you got to be willing to okay, we could have a new profile and we could have an entire exploration of that fair auction down to 125.15. That could happen. Yeah, those aren't. Those are not women in the closet screaming. Those are chickens. Yes. Here we go. International paper. All right. So I've kind of been a big fan of this stock. Obviously, pulled back with the rest of the market. 51.40 still going to be support on this. Got to wait now until we get back above. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. So taking a look at the XLF, let's take a look at this sector. Obviously been the darling of the S&Ps. 2411 broke yesterday, kind of broke a little bit quicker than the market was kind of doing its thing on the downside. So what do you do with it now? Rates not really coming off that much. I mean, 10-year and the 30-year not doing a moonshot here, so nothing super scary for the banks on that scene. Here's JP Morgan. Wow. All right, so 88.59 is a big number there. I'd pretty much wait until we get back above there. Weekly close above there. We'll kind of put these things back in north mode. My screen's stuck. All right. Okay, there we go. You do have a daily unfurl here that is hit, but again, that weekly is a big number, so kind of ignoring that daily right now to try to pick up anything on sale. Let's take a look at my favorite company and staff, Wells Fargo. Okay. Kind of similar to JP Morgan, breaking down below back in a profile, just breaking some technical areas here that are important. 56.67. You know, I kind of leave these banks alone. I mean, they could rebound in a heartbeat. Just let's wait for some confirmations on that. Bank of America. 22.75 weekly on for lows, not really breaking down yet on the weekly on Bank of America. So let's take a look at Citigroup. Yeah, I just kind of wait and see on these banks. I think you got better things to short out there or be long. Just kind of wait for some confirmations on some of these banks to get back above if you're looking to go long. Now, this is one, you know, we had looked at as kind of showing some cracks in the armor early. Goldman Sachs, that is, you know, reversing back in the profile, getting all the way down to the bottom of the fair auction yesterday. Had not really participated lately in the latest bank crazy moves up. And here's the daily. We really had some reasons to get short this the other day as a kind of a weaker stock in that sector that had gone wild. So right now we're down at looks like 232, right at a possible trading opportunity on the opening, but I don't know. You know, this sector may slough off a little bit more here. But GS, let me show you something. Going back into the scanner, let me just type in GS really quick here. There it is. So you'll see it says bottom right there. That means that we are at the bottom of that weekly profile there. Bottom 32. So been in consistent uptrend for 32 weeks, and now we're pulling back to Custer's last stance on it. That's what that means. Kind of cool. All right, so I want to take a look at the utilities here. You kind of knew this was going to happen. I think this could actually have a little bit more upside to it, even though we've kind of reached some targets again up top. Keep your eye on the XLU for kind of getting back above 51.64. Any daily closes above there, I think we could have a little bit more movement on the upside on the XLU. The XLE, it's kind of hovering down here. Crude, we're going to take a look at that really quick. Didn't cover that earlier. I wanted to. Sorry about that. Let's take a look at what's going on here. So we kind of reversed back up in the profile. I thought we might be able to kind of catch a bid there for a trading opportunity around 48.76 on a pullback again, but that didn't happen. That didn't help the S&P's. Crude coming off again. Let's take a look at the Exxon Mobil's of the world really quick. All right, so not exactly acting too bad down here. Trying to kind of get its head above. Didn't cave in totally bad yesterday. 81.51 support on this. I actually like, I know it's not the rosiest situation in the oil sector, but I kind of like how it's hanging in there and holding up, and I think you can try to catch a bid here with stops below 81.51 on Exxon Mobil. Any questions in the den? You guys throw them out there, and I'm sorry if I missed any earlier that I didn't see. Let's take a look at the only legal monopoly in the United States right now, Amazon, currently. I wouldn't call that reversal city there. This is the daily on Amazon. That was the weekly. You got big support at 831, 832 on Amazon. Still not thinking this is a short. This is kind of a lottery ticket buy the put situation, maybe somewhere out in the fall. When it happens, it happens. General Motors. So this had kind of started showing some weakness ahead of time, breaking below those dailies at 36.75. And then confirmed yesterday, big time. So what do you do with General Motors now? Do you hang on to it? Do you buy more? Do you try to short it at this stage? I think, yesterday's technical action, we kind of, closed below and yesterday opened right at that unfair low on the weekly and sold off. So I think that trade probably is out of the barn right now. Home Depot. This is one I've been really, really excited about continuing to stay long. This is yesterday. This started showing yellow kind of early on the weekly. We are kind of in support mode here right now on the daily. As you can see, we had our weekly and daily profit-taking mechanisms show up, those yellow peelbacks on both time frames. So right now, I think it's just kind of a sit tight on Home Depot. I've been a big fan of this one for a while, but this is the first time it's really said, hey, you know what? We might have reached a little bit of a target here. So sit tight on this one. DuPont, kind of a similar situation. Started flashing this in the scanner yesterday on the weekly. Just kind of, it's been a great trade. It's been a really cool setup along the way. Strong stock, buy support, buy breakouts, buy pullbacks. Right now, you're just kind of in sit tight mode on this one. And this morning, it looks like 78. We're trading much lower, so you'd save yourself some money there. taking that into consideration.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Take a look at Nike. Some downside movement, obviously, after the close there. So where we at now? We're sitting right at weekly unfair lows, 55.03. I don't mind buying something like this. Just a little bit of a trade here, right at the weekly unfair lows. Might get a little pop on the opening. Got to watch the market though. Let's take a look at RHT. It's a little bit of a gamble there, doing those types of trades. Red Hat. 81.35. So here we go. I mean, you got a better buy point a little bit lower on this one, 80.05, right down the street here, Red Hat. All right. Let's do a little recap here for you guys. S&P's 2341 is a big number, trading about right there right now. For longs, we got to cross that border and get back above. If we consolidate down here, then that's kind of not wanting to get away from that inflection point. So right now, kind of a mixed bag. We're down at a weekly inflection point. Don't have a ton of edge there. That was a pretty good trade yesterday, though. Let's take a look at American Express. Finally came off a little bit. I don't mind buying this one down here. This is one that's just kind of, in fact, I think AXP, it's on uptrend support right there. I go into the matrix, there's AXP uptrend support, risk reward 6.82, beta difference on a 6-day look back period negative 0.86. It's a pretty good looking trade here. This Roper there, let me just pull up the chart. There you go, right there. Kind of cool. All right, a couple other things for you before we get going here. Gold, don't see any reason at all to short this. Zero. Big support's now at 1236 on this, and nothing. There's no reason to take the longs off. If you've kind of been in that breakout mode again above 1236 as of 1235, 1236 as of yesterday. We talked about this 1217 and then some initial targets 1236, got a little back off, and then we got to trade the breakout again or support again. So again, we're not in any type of situation to short gold. 30-year, moved significantly this week, back above 148.29, 149. So what do you do with the 30-year now? I don't know if there's a reason to pile in the longs on the 30-year or the 10-year now. It's kind of a no trade, in my opinion. Ouch. Let's take a look at silver. I had talked about just kind of basically trading gold instead of silver from the long side. That was kind of the better situation. Silver's just, I don't see a lot of edge there right now. Okay. Let's take a look at another sector. I'm sorry, there we go. XLP, Staples. Kind of hung in there. Don't see any real reasons to take off any Staples. I like how this profile appeared below price action on the weekly, so kind of a stellar sector there. Damn, we're already leaving. Wanted to cover a couple other things. Guys, stay tuned for Larry. Thanks for joining us today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.